Okay, we should be golden. All right, still put your comments in the chat. I will be referencing that chat as we go. I know a lot of you are just getting logged in, but we are going to go ahead and dive right in because I have so much that I want to share with you, and I'm so excited about this topic. I love this topic more than anything. We are going to be talking today about how to get free money for college through what we call tax scholarships. I'll tell you a little history about how all this came to be as we go, but we are going to talk about getting tax scholarships. I know a lot of you already know that the cost of college has skyrocketed. I've been showing this same graph since 2022. The cost of college has gone up over 1,400% since 1978. The price of college increasing over almost 8 times faster than wages. This was true then, and it's true now. It's just continuing to get worse. The reality of it is college is expensive. Now, we work with a lot of high-income families, and the average family is spending $200,000 to $400,000, and sometimes that's per student. But at least that for the family if you have multiple kids. But it's costing a lot of money. And the worst part is that you spend the money on college and then the money is gone. So I am curious. Again, we're going to be using the chat a lot. I am curious. Are you concerned that helping your kids pay for a college education will have a negative impact on your retirement? Yes or no? Yes, if you're concerned that it's going to hurt your retirement a little bit. No, if you have plenty of money for retirement, you're not worried about retirement. You're just worried about paying for your kids' college. What do you think it is? Put it in the chat. Yes, you're worried. No, you're not. Okay, so it looks like we've got, whoa, I gotta scroll back up here. We got lots of new people. Okay, Bella with yes, Kelly, yes. Darius, yes, yes, no, yes. Okay, with some potentially yes, no. Okay, awesome. Very good. So we got mostly yes, some no. Well, here's the reality. Not to add insult to injury, not to twist the knife or anything, but there is a secret cost of college, and that is what we call the opportunity cost of college. So it's not just helping your kids pay for college. It's not just paying, $30,000. It's what that could mean, right? It's what that could mean in your retirement. The cost of college, okay, of $300,000, let's say, over time could be over $1 million in retirement that you're not going to have. That's $1 million that you're not going to have. Now, that is the biggest concern because it's like killing the goose that lays the golden eggs. Let's say 20 years, that $300,000 you spend on college, per student, right? That money could have been compounding interest. It could have been growing. And when you spend that money on college, it's gone. So there's the opportunity cost of what that money could have earned in retirement. The timing is also horrible because when your kids are in that ages of 18 to 22 and they're starting to go to college and you're paying all this tuition, that's when you're making your peak earning years. So you're in your 45 to 55 age range. You don't need to share your age in the chat, but I'll bet most of you are in that 45 to 55 age range. And you're in those peak earning years. That's when you're saving the most money. You're trying to get, you're trying to save enough for retirement. And then all of a sudden, that's when your kids go to college. The timing is terrible. So what most people focus on is where can I find free money for college? Traditionally, there are 2 ways to get free money for college. Number one is what we call student positioning. Student positioning is where you get merit-based scholarships. I'm sure everyone on this webinar has heard about merit-based scholarships. It's where you take that student, and help them to become an exceptionally gifted student. Maybe you get them a tutor. Maybe you help them with like a college counselor. Maybe you get them some study materials for the ACT, SAT. They take a lot of extracurricular activities, things like that. And the reality of it is the low-cost colleges don't really offer a lot of discounts. All these top private schools, these expensive private schools, they don't offer a lot of merit-based scholarships. They just expect you to be smart, or they don't even accept you. They don't reward you for being smart, okay? And sometimes searching for scholarships, like private scholarships, can feel like a full-time job. And you have to have a student that's in the top percentage of that school. So I have 5 kids myself. Some of them are exceptionally gifted and some of them are gifted in other ways. And so not all of them are going to get scholarships. And so that is one thing to consider. But the second way to get free money for college is through what we call need-based financial aid. Need-based financial aid is based on your income and your assets. So we're going to do something really quick. Again, like I said, we're going to be interactive. So go out to collegecostcalculator.com. Go to collegecostcalculator.com, and I want you to put in really quick, I want you to put in the number of parents, the number of students. I want you to put in your income. You can just ballpark this, but put in your income. Put in some money if you're contributing to a retirement account. You can put that in there. You can put in how much money you have in some checking, maybe a checking account. Maybe you have a brokerage account with some money in there. Maybe you have maybe a 529 account that you've saved. Okay. Oops, maybe probably not that much. Maybe you have some assets in maybe you have some equity in your house. Okay. And that's going to calculate what we call your financial aid number. Your financial aid number. Go ahead and put your SAI, put these two numbers right here, your federal SAI and your institutional SAI. Put these two numbers in the chat. Just curious. I just am curious. I want to help you to calculate. I'm going to show you how to calculate if you get financial aid. I'm going to show you how to calculate if you're going to get financial aid. So put your two financial aid numbers in the chat, and I'm going to show you how to calculate your financial aid. So this number right here, your federal SAI number and your institutional SAI number. Go ahead and put those numbers in the chat. And while you're typing those in and while you're calculating it, okay, I'm going to show you how this formula is used, okay, how this formula is used to calculate your financial aid. First of all, every school, all right, looks like numbers are coming in. All right, great. Every school has a cost of attendance. The cost of attendance is room and board, books and supplies, everything else, okay? The total cost of attendance. You take the cost of attendance minus your number, okay? So Sarah, we've got 78,000, Scott, 137,000, Alex, 75,000. Okay, so take your number, okay, take the cost of attendance minus the number, and that will tell you if you're going to get any financial aid or if you're eligible for some financial aid. That's how the formula works, okay? Most of you, as you can tell, most of you will be paying full price for college. If you don't get some scholarships, you're probably not going to get financial aid. Now, this is a little bit about my background. If you've never been on one of my webinars before, I always tell everyone I've learned all this information out of desperation more than inspiration because I have 5 kids. I have 2 that are married. I have a little grandbaby and 2 more on the way. So family is growing. I've got kids. I've got 2 college-age kids, 2 that are in high school, and the little guy, he is in elementary school, 5th grade, just started. Okay. So the reality of it is college is expensive, and I was feeling that pain. I actually left the IT industry about 20 years ago and got into the financial services industry because I was very fascinated about money. I loved learning about money. I loved learning different financial strategies. I got licensed initially back in 2006, so I've been doing this about 20 years. But what I learned was how to set up 529 accounts for my clients to be able to save for their kids' college. I was using 529 accounts for my kids. I was teaching families how to use IRAs and working with companies to set up 401k plans. And I was doing everything that was very traditional. And the reality of it was I started to learn that money inside of a financial aid account, money inside of a 529 account hurts this number right here. Okay, all these assets, look at this. All these assets, they hurt this number, right? So your assets are a big factor in that number. And so I actually started to teach families a different way to save and pay for college. I wrote this book called The Retirement Scholarship Strategy back in 2018. And this particular book talked about a better way to save and pay for college that would help you get financial aid. Now, we helped lots of families, and we still help. We've helped a lot of families over the years. We've helped over 6,000 families over the years with our proprietary software to be able to calculate how much college is going to cost, show them better ways to pay for college. We've helped over 20 families just today, over 1,000 families in the last 60 days. We've helped a lot of families. And fast forward, I was making a lot of money. My income got over $1 million. And I thought, there's no way I'm going to qualify for any financial aid. It doesn't matter where I save my money. I'm not going to qualify for any financial aid, whether I use a 529 or not. As you can see from these numbers, it doesn't really matter so much what your assets are. Okay. Even if you had no assets, no equity in the house, okay, you have no money in the bank. Okay. The numbers are still high based on your income. So if you're making $300,000 a year with no assets, that's still a very high number. It's a very high number. You're not going to get a lot of financial aid, if any, is the problem. And so I was freaking out about the cost of college. I've got 5 kids. I was looking at paying full price for college. I do have, one daughter that got a scholarship. She was on the cheer team at Utah State, so she got some scholarship money. But I was looking at paying full price for these kids' college. And then when my income got up to a certain point, I was focusing on tax strategies. I was trying to figure out how I could reduce my taxes because I had another problem. I got to be less and less worried about the cost of college and more worried about how much I was paying in taxes every year. Okay. So if you think about it, if you look at your number over here, okay, this is how much you're paying in taxes. That's also a big number. And so I learned ways to reduce my taxes. One way is using real estate depreciation, for example. You can invest in real estate and get some tax deductions from investing in real estate. We'll talk more about that as we go. But I thought, man, that sounds like a lot of work. Okay. That sounds like a lot of work. I was running a business. I was helping lots of families. We were very, very busy, and I just didn't have a lot of time. I didn't have a lot of time to be able to focus on some of these ways to reduce my taxes. And so I built a team. I built a team because a mentor of mine told me about my favorite book. This is my favorite book, Who, Not How. I love this book, Who, Not How. It changed my mindset about trying to do everything myself, and it really helped me to be able to think a little bit differently about how I could use others' expertise to help me implement some of these strategies. So what I did is I went out and built myself a team to be able to help me with some of these tax strategies and real estate strategies and things like that. And ultimately, that's what we are now offering to our clients, because I thought, hey, I'll bet you my clients would love this. I'll bet my clients would love to reduce their taxes. That's what we call tax scholarships. If you can reduce your taxes, that is a big deal. So we created some done for you tax strategies to help you out. This is what Kevin Harrington, one of the original sharks from Shark Tank, had to say about what we're doing for families.
I'm Kevin Harrington, an original shark from Shark Tank. Lance Morgan teaches families how to pay for their children's college without sacrificing their retirement. And I recommend these unique strategies to save and pay for your kids' college education.
All right. Okay. So how many of you, would like to learn about what we call tax scholarships, done for you tax strategies to reduce or eliminate your taxes? That's the first thing that we're going to talk about. We're also going to talk about some turnkey, kind of done for you real estate strategies to create tax savings and cash flow to actually pay for college. And then we're going to tie this all together into some creative college planning that I'm going to show you how to reduce the cost of college. All right. So give me a thumbs up. Give me a thumbs up if this is what you are excited to learn about on this webinar. Hopefully this was what you are here to learn about, because that is what we are going to dive in. All right, look at you guys checking out. You guys already know how to use your emojis. You must be on other Zoom calls. You might know, it looks like you know how to use your emojis. Now, I will say this, we're going to go a little over an hour. And so if you have to jump off early, I'm just going to throw this out there up front. If you have to jump off early, you can go to taxscholarships.com and book a call with our team. Okay, so you can learn more. If you don't get the whole webinar and you want to book a call with our team to learn more about how we can help you specifically, then just book a call. It's completely free. Just book a call with our team and you can see how we can help you a little bit more specifically. All right, let's dive in. Let's dive into what we call tax scholarships. And I do encourage you to stay till the end because the best part is at the end. We've got some really cool strategies you've probably never heard about, which I'm excited to share with you. All right, let's talk about tax scholarships and hear from one of our clients here.
And long story short, we were able to write down our taxable income down to 0 in 2025 and get a really big, fat, multi-six-figure tax return.
Nice. All right, so let's talk about that multi-six-figure tax return. Talk to me about that day when you saw that tax refund.
Yeah, that was amazing. And to your point, no, in the past, we've never gotten money back. We always pay, over $100,000 in taxes every year. Yeah. And just accepted that as that's the way it is. Yeah. And so this year when we implemented that tax strategy, I worked with the CPA and they told me what the return was going to be. But I still didn't really believe it until that day when I checked my bank account and that tax refund hit. I was like, holy shit, it's actually there.
Okay. All right. I want everyone to go look at their number right here. I want everyone to go find their number. We're all friends. It's okay. We don't know each other. Just go grab your number that you're paying in federal taxes. Put your number in the chat. I'm just kind of curious. Everyone put their number in the chat. How would you like to have that experience? Okay. How would you like to have that experience where you would look at your bank account someday and get that number back into your bank account? All right. So, all right, we've got Christine at 80,000, Scott at 43,000, Gina 71,000, Elizabeth 56,000, Sarah 37. All right, Suzanne 47. All right, Steve 26,000. All right, keep them coming. All right, keep them coming because all right, there we go. Keep them coming. How would you like to have that number every year put back into your bank account? Janelle at 72,000. All right, or 7,200. Okay. So the mission for this webinar, this is our goal today, to help high-income families, and I can tell by how much you're paying in taxes that you're a high-income family. So our goal is to help high-income families to send any student, exceptionally gifted or gifted in other ways, to any school of their choice without a negative impact on retirement by using what we call tax scholarships. Who's excited? Who's excited to learn how to do that? All right, give me some more thumbs up in there, all you emoji people. All right, here we go. All right, so here's the other problem. The other problem is all of you, I can tell right now, all of you are doing your part in paying the taxes in the country right now, because guess what? If you make over $187,000 as a family, as a combined household income, everybody making over $187,000 combined household income, you are in the top 10%, okay, wealthiest families in the country. Did you know that? If you're making over $187,000, you are in the top 10% wealthiest families in the country, and you guys are paying 70% of all the taxes. Let that sink in for a minute, okay? You are paying 70% of all the taxes if you make over $187,000 a year. And I don't think taxes are going to go down anytime soon. Did you guys know that in the 30s, 40s, 50s, 60s, that the upper income tax bracket was 90+%? 90%. Like even in the 60s and 70s, it was 70%. Look at where we're at now. Who thinks the taxes are going to go higher or lower? Just for fun. Put higher if you think taxes are going to go higher in the future, or lower if you think taxes are going to go lower in the future. What do you think? Just for fun. Higher or lower? Okay. Janelle says higher, higher, higher. Lindsay, higher. Sarah, higher. Kelly, higher. Okay. All right. I think we all agree. All right, Jennifer. Okay. We all agree. Perfect. Okay. You want to know what's crazy though? Here's what's crazy. There was an article in the ProPublica magazine. There was an article that talked about how some of the wealthiest families, now I know that this is a little dated. This is a few years old. Okay. But this article talked about how some of the wealthiest people in the country are in a true tax rate of 0.1%, 0.9%, 1.3%, 3.7%. That is crazy. They're in a lower effective tax rate than you are. Now they're still paying, they're still paying plenty of taxes, right? They're still paying a lot of taxes, but compared to their wealth growth, okay, it's crazy what they're not paying in taxes, right? It's crazy. So I'm curious. I'm curious how you actually feel about taxes. This is going to tell me a lot about who's on our call tonight, okay? Put a 1 in the chat if you feel like you pay too much in taxes and would love to learn how to reduce your taxes. Put a 1 if you resonate with that. Put a 2. Okay. Oh, now I've got your attention. Okay. The chat is blowing up with 1s. Put a 2 if you're already implementing tax strategies to not pay taxes. Okay. Or maybe it's like 1 and 2. Maybe you're doing some stuff, but maybe you could do a little bit more. You could put a 1 and 2. Okay. All right. We've got some 2s. Not bad. Well, a few, but it looks like mostly 1s. Okay. I'm also curious if you feel like tax mitigation strategies are too risky. Put a 3 if you think they're too risky. And number 4, if not paying taxes is unethical. Just kind of curious. I mean, we can be honest. Looks like we're sticking to okay, we do have 4. Hey, thanks for being honest. All right. Okay. It looks like most of you are in the category of number 1. Okay. So I want everyone to go look at that number again. I want everyone to go look at that number that you're paying in taxes. And that is the number that I'm going to help you with, because what if the money you are paying in taxes could buy an asset that pays for your kids' college? Okay, think about that for a minute. What if that money that you're paying in taxes could go towards an asset that pays for your kids' college? Okay, that is what I want to show you. That is the goal. We call those tax scholarships. Free money from the IRS, not a university. Money you are already going to give the IRS, kept legally using the exact same tax code that business owners and the wealthy use every day. Okay. Here's what Yamini had to say about her tax situation.
Really valuable from what I got from working with you is that for years we were paying our CPAs thousands of dollars, hoping that they would give us these type of strategies. But what they were doing was making sure that we were tax compliant and that we were not going to be audited and that they were covering themselves. And that was it. So that's why we were paying them a lot of money. And I found that what I really wanted was something like this, where they were showing us how to grow our money and how to use the tax code to our benefit. And that was never, ever shared. And these were really high-end firms that we used, because we thought the higher you go, well, they're the ones who are looking after the billionaires. So that means they know all the secrets. And we never got into this. So when I heard your presentation, I thought, why is it that none of the CPAs that we've worked with who are so, renowned have never said this to us?
Okay. How many of you can relate? Give me a thumbs up if you can relate. How many of you are a little frustrated that you're paying a little bit too much in taxes and maybe your CPA isn't, helping you as much as you think they should be? Okay. Now, here's the deal. Looks like we've got a lot of thumbs up. I think you can all maybe relate to her pain or frustration there. Here's the thing though. Most of you don't need a new CPA. That's exactly what I thought. I actually thought that the answer was a new CPA. Now, some of you do need a new CPA, okay? I'm not going to lie. Some of you might need a new CPA, but a lot of you probably have a good CPA. The reality of it is that your CPA is trained to help you file your taxes and make sure you're compliant and all that kind of stuff. What you need is a tax strategy to reduce your taxes that'll help you also pay for college. You need a tax strategy, not necessarily a new CPA. Okay. So I'm going to give you the 5-step checklist to choosing a tax strategy. Now, I know one of you said that, reducing taxes is unethical. It might be a little too risky. So the first step is that it needs to be legal and encouraged by the government. Okay, it needs to be encouraged by the government. There's this book called Tax-Free Wealth. And this was Tom Wheelwright is the CPA for Robert Kiyosaki. If you're familiar with Rich Dad, Poor Dad, Robert Kiyosaki, this is his CPA. And in this book, I liked what it says. In this book, it said, it's talking about the wealthy. These people understand that the tax law in every developed country is now a series of incentives for entrepreneurs and investors. In the United States, over 95% of the tax code is intended not to raise taxes, but stimulate economic growth, basically. Okay? The government actually wants you to start a business, invest in real estate, buy a box house, which I'll explain what that is, heavy equipment leasing, oil and gas, charitable donations, electric cars, solar and battery storage, things like that. There's a reason why Elon Musk doesn't pay a lot in taxes. He created a company that sells electric cars, which is exactly what the government wanted him to do. The government wants him to produce electric cars so that we're not as dependent on oil. Now, not to get into all the political side of it, but the point is that Elon is not in jail for tax evasion. Elon is not in jail for tax evasion. He did what the government wanted him to do. Okay? Now, the second checklist is that the tax strategy that you choose needs to be available for W-2 and 1099 employees, because most of the tax strategies are only for the business owners. Give me a W-2 or 1099 in the chat if you are a W-2 income earner. I'll bet you we have lots of W-2 income earners on here. Do we have some W-2? All right, yep. Oh, there we go. You guys got to keep that chat handy because we like our chat. All right. Yes. Look at you guys. Look at you guys. Okay. Most of you, I'll bet you 90% of you are W-2 or 1099 income earners. So you need to offset your W-2 income. That is crucial. Now, not to get into too much of the weeds, because I'm not going to give you tax advice. Here's my disclaimer. Okay. This is for education purposes only. I'm not giving you tax advice. I'm not a CPA. Okay. But there's this thing we call the excess business loss limit. Okay. And it's section 461L. But for a single person, you can reduce your W-2 income by $256,000. And if you are married filing jointly, you can reduce your W-2 income up to $512,000. That offsets your wages and investment income. Okay. I'm not going to get into too much of the details, but you need to make sure that the tax strategy that you choose can offset your W-2 income. So I want everyone to think about that. Now, there's no limit for business income. If your income comes from your business, that's fine. There's no limit to that. I reduced my income over $1 million last year. Okay. There's no limit if your income is coming from business income. Okay. So I want you to go back over here and I want you to reduce your income by up to $512,000. Okay. So if you don't make $512,000, just put a 0. Okay. But I want you to reduce your income, your W-2 income, up to $512,000 if you're married filing jointly. Give me a thumbs up if that would help. Would that help to reduce your income by $512,000? All right. Oops, I lost my chat again. There we go. Okay, we got some thumbs up. Okay, I think we're on the same page here then. Awesome. Perfect. Okay, the third step, leverage. Okay, leverage. The lowest investment for maximum tax savings. That's the goal. Lowest investment for maximum tax savings. One of the easiest ways to do that is through what we call depreciation. The government allows us to take what we call paper losses. Paper losses is basically what a depreciation is, okay? Depreciation is where you buy something that depreciates over time, and the government allows you to reduce your income by the amount of that item. And because of the one big beautiful bill, Donald Trump brought back 100% bonus depreciation. What does bonus depreciation mean? Let me give you an example. I like the Land Rover Defender, as you can tell. My wife bought one and I really liked it, but she wouldn't let me take it off road because they are really fun to take off road. So I had to buy my own. Okay, so yes, we have two defenders and they both qualify for bonus depreciation for our business. Now, normally when you buy a vehicle, it depreciates over 5 years. So the value of the vehicle is considered to be only worth 5 years and then it's practically worthless. So when you buy, let's say you buy a $100,000 vehicle, it's going to depreciate over 5 years and you get to reduce your income by $100,000 over 5 years. But bonus depreciation allows you to reduce your income in 1 year. Okay, the full amount. So I bought this black Defender in December last year and was able to reduce my income by over $100,000, and I didn't even make my first payment until January. That's what you call leveraging, basically. Like I basically spent nothing and reduced my income over $100,000. Okay. So what else? Give me an example. What else can you depreciate? A car is just an example. What else can we depreciate? Throw it in the chat. What else is an example of what we can depreciate? Any other thoughts? Okay. Rental property, a house. Yes. What else? Anything else? Throw it in the chat. There's a lot of things. There's a lot of things that you can depreciate. Okay. Equipment. Yes. Equipment is a big one. Excellent. I think we're hitting the big ones for sure. Equipment, real estate, things like that. Obviously the vehicles. Okay. Real estate is an excellent thing to depreciate because the government allows you to depreciate real estate, but in most cases, real estate actually increases in value. Okay. Are houses today worth more than they were 50 years ago? Yeah. Okay. Even a house that's 50 years old. Now, a car that's 50 years old, I mean, if it's been restored and it's an antique, maybe, but like a car that's worn out, 50 years old, probably not going to be worth much, but a house is worth more today than it was 50 years ago. So real estate is a great way to take advantage of depreciation. Now, if you're going to use depreciation with real estate, it's a little bit different. There's what we call a cost segregation study. A cost segregation study is the formula for calculating the depreciation. It's a little bit more complicated with real estate. When I bought my car, I could depreciate the full purchase price of the car. When you buy real estate, you can't depreciate the full purchase price of the real estate. So you have to do what they call a cost segregation study, and it's going to look at what you can depreciate, like curtains, TV, coffee table, carpet, couches, blinds, appliances, fixtures, all of these items, some of the landscaping, driveways, things like that, the pool that you put in, okay? Those items can be depreciated over a shorter period of time. And with bonus depreciation, they can be depreciated in 1 year. And it's roughly 30% of the actual purchase price because you can't depreciate the land. You can't depreciate the land. So if you buy $1 million house, you could reduce your income by about $300,000. Okay. Nadia says, was your car registered to your business? Yes, it would have to be a business expense. So if you're a W-2 income earner, you can't write off your car. But I'm going to show you how. I'm going to show you how in just a minute. But yes, it has to be like a business expense, right? It was a vehicle for my business, basically, right? Okay. All right, here's a house that I bought last year. I bought this cabin in Idaho on the lake that we love to go and use. And it was a 1.4, almost $1.5 million house. And it reduced my income last year by $456,000. We also bought a house out in Panama City Beach last year. And this house in Panama City Beach was a $620,000 house, reduced my income by $186,000. Okay, just to give you an example, we have several more. We have over 50 of these properties. Okay, so pop quiz. All right, again, a little temperature check here. What would you do with your tax savings? I know everyone typed in how much you were paying in taxes, okay? So what would you do with your tax savings? Put a number 1 if you would use it to pay for college. Okay, you would just take the savings, take the tax savings and just go pay for college. Give me a number two if you would invest in more assets that create more tax savings for the next year and use the cash flow from those assets to pay for college. Just curious. Okay, Jennifer changed her mind. Okay, number two. Okay. All right, we've got some number twos. Okay. All right. Interesting. Interesting. You guys are on this. Hey, we are on the same page. All right, Sophia, Christine. All right, right. Okay, or number three, you could put, I don't know. I don't know what the something else would be, but yeah, who knows? Maybe you have something in mind. Okay, all right. So looks like everybody's on the same page. You do not pay, okay? You do not pay for college with your tax savings. You do not pay for college with your tax savings. You invest in more assets that give you more tax savings the next year. And you pay for college with the cash flow, which brings me to number four. Number four is cash flow. Does my vehicle that I bought to reduce my taxes, does that provide cash flow to pay for college? No. Did it give me a tax savings? Yes. Okay. Of course, it gave me some tax savings, but is it going to pay for college? No. Okay. So in order to pay for college with these tax strategies, you need cash flow. You need cash flow. So you can take your tax savings to go buy more assets every year. We want you doing something every year to reduce those taxes. Okay, so the cash flow from your assets. Now, there's a number of options. You could invest in heavy equipment and lease it out. And you could get cash flow from that. You could invest in solar batteries and lease them out and get cash flow from that. You could invest in real estate and get cash flow from that. There's a lot of ways to get cash flow, but the cash flow is going to go towards paying for college. Okay, but maybe your kids are going to an Ivy League school next year or this year. Maybe you've got kids going to college in a month, well, maybe now. Basically, they're starting now, right? And you might not have enough cash flow. That's okay. You can take out loans. You can defer loan payments until 6 months after graduation. For the next 4 years while your kids are in college, we'll buy assets with our tax savings and build up that cash flow. And then we'll use the cash flow from all of our assets we buy every year to pay the college loan payments. And then when the college loan payments are paid, that same cash flow can help us supplement retirement income. I hope this makes sense because honestly, this is like the crux of the webinar. I really hope this is just clicking. I want this to click because this is the whole key to what I'm trying to help you with. I want you to save a lot of money on taxes, but I want you to take the tax savings to buy more assets that generate more cash flow. I want you to use the cash flow to pay for college and then pay the college loans. But that means you might have to take out some loans. And I know a lot of you were not planning on taking out loans. You were planning on paying cash. But if you pay cash for college, the money's dead. The money's gone. You're killing the goose that lays the golden eggs. If you pay cash for college, like let's say you get this huge tax savings, you save like Josh. Josh said that he saved a six-figure tax refund he got back. If he takes his six-figure tax refund and goes and pays for college, the money's gone. The money's gone. It no longer grows. But if we go buy more assets and get more tax savings, then the cash flow can pay for college. We just have to take out loans and kick the can down the road until after graduation. You can defer payments until after graduation. Please ask me questions if you have any questions about this, because this is super important. Super, super important. Of course, I'm going to give you some specific examples, but if you have any questions about this, just go ahead and put them in the chat and I'll get to them. Okay. Fifth and final checklist. The fifth and final checklist. How many of you are busy? How many of you are busy? Give me a thumbs up. You're W-2 income earners. You've got kids. Okay, most of you have kids in high school. It's got to be one of the busiest times of your entire life, right? One of the busiest times of your entire life. You probably don't have a lot of time. So you need to make sure that the fifth and final checklist is that whatever tax strategy you use doesn't take a lot of your time. There's a few different options. You could start a new business if you're bored, or if you don't have a job, or if maybe, your kids are all in school now and now you're ready to get back to work or something like that. You could start your own business. Okay. You could do 750 hours as a real estate professional. Okay. You could do 100 hours if you're single, or 50 hours if you're married, or no time at all. Which one would you like? Just curious. 1, 2, 3, or 4. Put a 1, 2, 3, or 4 in the chat. Which one would you, in your current situation, which one would you be open to? Which one would you ideally like to use if possible? Okay, we got a lot of 4s. All right. You guys are really busy. You guys are definitely busy. Okay, so let's take a look here. Let's dive in. Okay. Oh, and before I go over some specific examples, the last thing that I want to talk about is, guess what? If you go and reduce your income by up to 512,000, what did it do to your SAI and EFC number? Put that in the chat. Put your new number. What's your new number? What's your new number in the chat if you reduced your income up to $512,000? Now, you might have a lot of assets, so you might have to do some restructuring, okay? But what's your new number if your income goes down over up to $500,000? Because okay, this is called the cherry on the top, okay? But by reducing your income through these tax strategies, you may, and I need to emphasize this word right here, you may also increase your financial aid eligibility. Okay. You may also increase your financial aid eligibility. All right. Jason, you went down from 75,000 to 20,000. Perfect. Sarah's down to 0 or 13,000. Okay. Perfect. So you've got some assets in there. Okay. No problem. For some families, meaningful grant money at schools they never expected to get some free money from. We cannot promise free money from universities. It totally depends on the schools. I'm going to tell you right now, most of your private schools are not going to allow you to take like these business losses as part of the fact, a lot of your private schools are just going to look at your W-2 income. But if you're looking at like public schools, if you're looking at public schools that only use the FAFSA, they don't use the CSS profile, you have a chance of getting some free money. Okay. Just throwing that out there. We call that icing on the cake. Okay. All right. And that's through what we call financial positioning. Financial positioning is where you take this really high number and you lower it. That's what we call financial positioning. Okay. That's a number of ways. And again, you can go to your calculator, play around with that, play around with the numbers, see what would happen if you moved some of the assets around. Okay. All right. Here's an example. I'm $86,000, $86,000. But if I have a really low SAI number, I could actually qualify for lots of financial aid. They're going to help with 72% of it. I could end up getting $47,000 a year in free money. If you haven't chosen a school yet, you could choose a school based on who's going to give you the most free money. Just something to consider. Okay. So you benefit from lowering those financial aid numbers to qualify for more financial aid. That's awesome.
Correct.
And you said you got some tax savings. Have you gotten your tax refund check yet?
We did. I'm happy to say we owed 0 federal and state taxes last
Nice.
year, which was kind of nice.
Did you actually end up getting some tax savings at the end of the day?
We did, yes. We bought a box house, and then through the tax team, they were able to help us file all the correct tax forms, and our tax returns came back, and it completely took away all of our taxes. It repaid us back all of our taxes for that tax year. It'll affect our son's education years for his junior year and his senior year in college, and then of course now we're on the front end of our second son for all 4 of his years. So yeah, it was great. It was just like a great solution that we could just jump right into.
Okay. All right. Let's go ahead and dive in. If you need to jump off, I know some of you have to jump off before the hour. We've still got the best. The best is yet to come. But if you do need to jump off, and you want to learn more, okay, just book a free call with our team at taxscholarships.com, taxscholarships.com, book a call with our team, and we'll help you, kind of show you how this would apply to your specific situation. But I want to show you 2 done for you examples and how we can help. Okay. Because again, you guys said you were busy. I understand. I was very busy. When I started learning about some of these strategies, I honestly just thought, how am I going to ever, find the time to focus on this? And that's when I decided to build a team that I could use and you could use. So basically, I built a team that we could both take advantage of. And the first example I'm going to share with you is real estate investing. Now, the benefit of real estate investing is if you invest in real estate, guess what you also own? You also own a business. You kind of get 2 for 1. You get 2 for 1 because if you are now a real estate investor, you are also now a business owner. So guess what? Your vehicles could be a business expense. Your home office could be a business expense. You could put your kids on payroll. Okay. You could rent out your house to your business called the Augusta Rule. You could take your kids on a company business trip. Okay. I took my whole family, which includes my employees because my kids are on payroll. I took my whole family to Hawaii. It cost about $50,000 for their flights, their food, like the hotel, everything in was about $50,000. That was a tax write-off. That vacation was a tax write-off because it was a business trip. So there are things that you get to take advantage of as a real estate investor. Now, can investing in real estate offset your W-2 and 1099 income? If you are a real estate professional and if you spend over 750 hours, then you can pretty much write off any real estate depreciation. However, if you are a W-2 and a 1099 income, okay, then there is a short-term rental tax strategy. What is a short-term rental? Think Airbnb, Vrbo, Booking.com, right? If you own a short-term rental, a vacation rental, an Airbnb, it falls under a completely different tax code, which is similar to the hotels and motels. Basically, an Airbnb is considered a mini hotel as long as you rent it out for an average of 7 days or less, meaning you can't have somebody in there for 30 days. Okay. It needs to be short-term rentals, like weekends, weeks, like vacation rentals where they come in and rent it for a week at a time. You have to qualify, okay, as a short-term rental, and then all of the bonus depreciation and everything can offset your active income. Here's one of our families that just went out and saw their new house. We are enjoying it. It's awesome. We'll share a few more pictures. Kudos to the team. Good work. Okay. This is a few more pictures of the house. We did this house in like a Ewok village, like an Ewok village kind of a theme, Airbnb. Okay. And our team designed it. We found it. We manage it. We do everything. Here's another one in the Disney World area. This is a nice little Disney theme where we do some custom beds. We do some really cool custom wallpaper. This is like an Avengers room, and that all counts. All that Airbnb, that all counts, okay, as a business expense for W-2 income earners, okay? Number 3, okay, leverage. Number 3, leverage. I already talked about this. I'm not going to spend a lot of time on this, but remember, $1 million property is going to offset your income by about 30%. So that's going to be about $300,000. It's through what we call a cost segregation study. This is a cost segregation study on my cabin. You can't depreciate the land. So I get to depreciate about $1.2 million over 39 years because an Airbnb is considered commercial property. It's not considered real estate. It's not considered residential, which is 27 years. So 39 years that I get to reduce my $1.2 million. But because of the cost segregation study and bonus depreciation, I'm able to take a huge write-off in the first year. A huge write-off in the first year. Okay, so my $1.5 million cabin reduced my income by about $456,000. My $620,000 house in Panama City Beach reduced my income by about $186,000. Okay, all right. Does that make sense? Okay, we're going to keep those questions coming in. We're going to dive into those questions in just a minute. The fourth thing that this helps you with is cash flow. We do all of the analysis and we make sure that these houses are going to cash flow. It's about 1 in 20 houses that we find will actually cash flow enough to make it a good investment. Not all houses are going to cash flow and make a good investment, but we also offer a partnership program where we are going to do most of it for you, and we'll even give you an 8% preferred return or 50% of the revenue, whichever is greater. Okay, an 8% preferred return on your initial investment or 50% of the revenue, and you get all of the tax savings. Okay, and that is going to be where we do most of the work for you. Now, let's talk about time. Okay, a short-term rental qualifies for what we call the material participation rules. That means that you and your spouse could go out and spend about 50 hours on the property if you're married filing jointly. And that's how you would get your time that allows you to reduce this on your taxes. But we do most of it for you. When I say mostly done for you, we are going to find the properties. We have an entire team. We have 4 people on our team that do nothing but call on houses all day, every day, trying to find a good deal. We're trying to find good deals. We're trying to find motivated sellers that will give us a good deal. We're then going to analyze the data for income projections to make sure it's going to pass, okay? Make sure it's going to qualify. We then use our team to transition and slightly renovate the property. We use our design team, okay, to design a unique guest experience. And then we use our management company to manage the guests and the property. Okay, so we do almost everything for you, but we can't do everything for you because you have to spend 50 to 100 hours. So you're going to visit the property to check it out. You get to count travel time and the time that you're there. So you and your spouse go take a 3-day vacation or visit to your property. You're going to research the restaurants and the activities. Maybe you're going to go golfing. Maybe you're going to go to a show, whatever the case may be. And you're going to help us create the guest book for the guests. Okay. You're going to monitor your income and revenue coming in. We have a custom portal that we built where when you log into the portal to check on your house, it starts tracking your time for you. Okay. You're going to post maybe on a social media page, and you're going to shop for more properties next year. And after you've purchased your first property, when you're shopping for more properties, that even counts towards your 100 hours or your 50 hours if you're married filing jointly. Okay. So again, if you want to learn how to invest in real estate with our team, if you want to have us, we can either do it with you or we can do it for you. If you want to partner with us, okay, if you've got more money than time and you want to partner with us, we can do most of the work. If you just want us to help you, we can also help you. If you want to learn more, go to taxscholarships.com. Okay, now, here's one that you've probably never heard of. But you can also buy a box house. What is a box house? Well, a box house is also going to be a business. So you also get all of the benefits of starting a business. But what is a box house? This is what a box house is. Okay, that is what a box house is. What do they use box houses for? Well, box houses are really cool. They have a patent that allows them to literally fold up and be sent in a shipping container anywhere in the world for temporary housing needs. For example, working in the oil fields, the data centers. There is a data center going in right now where they need enough housing for 10,000 workers. For like a 7-year lease. They need enough houses to have 10,000 workers. They build these data centers in the middle of nowhere. There's 2 of them going in Utah, out in the middle of nowhere. They're putting them in Texas. Like, they need lots of workers, but they're in these small towns. There's no places for them to live. So they need to basically bring in these box houses and create a port that's like a temporary city. They can just bring all these houses in as a temporary city. They can also be used in natural disasters, like the fires in Maui, in Lahaina. Okay, the Hurricane Helene, LA's Palisades fires. You can use them in RV parks, seasonal housing, mountain locations. They can be completely off grid. Okay, they can run on solar. They have a tank for the sewer and for the water, or you can hook them up to sewer and water. And you can even use them as Airbnbs or ADUs. I actually just bought a farmhouse on 10 acres in Florida by Destin. It's right by the bay and only like a few minutes from 30A, the beach there. And this house is a 3-bedroom, 2-bath house, but it's on 10 acres. I'm going to put 2 box houses that are a 2-bedroom, 1-bath house. And now as an Airbnb, okay, I've already got the land. Okay, I've already paid for the land, but now instead of a 3-bedroom, 2-bath, I'm going to go to a 7-bedroom, 4-bath. Okay, that increases my rent, it increases my revenue and everything else that comes in from that property. And I get the tax write-offs by buying these houses. And yes, they are designed for W-2 and 1099 employees. And it's a complicated, I'm not going to get into all of the details, but it's a complicated structure that uses what they call a series LLC that actually owns the house. Okay. And then that is owned by the parent LLC. And then there's a trustee, okay, that actually does the material participation. So you, as the trust and the beneficiary and the settlor and the grantor, like, you get all the benefits. You get all of the benefits of the depreciation and the cash flow, okay? And you don't even have to do the material participation. So the best part about these box houses is the leverage, okay? This particular box house, for example, is a $500,000 box house, and you only put 20% down, which is $100,000, and you get to reduce your income by the full $500,000. There is no cost segregation study. There's no cost segregation study because it's not real estate. These are considered personal property. It's kind of like buying the car, right? These are considered a trailer, basically. They are portable. These houses can be folded up, put in a shipping container, and sent anywhere in the world. They can be reused over and over again. Now, you might be thinking, there's no way that house is worth $500,000. Here's the deal. It doesn't matter how much the house cost to build. You can value real estate or you can value something like this, a box house, in a number of different ways. You can value it based on the use case. For example, FEMA spends over $200,000 for their FEMA trailers in natural disasters, and they are a one-time use. These box houses can be used over and over and over again, and they are made out of solid steel, and they have a 30-year shelf life, and they can be reused over and over. They can also be completely off-grid. They can be adjusted. They have these big extensions that can put them on uneven land, and all of the electrical and everything. They've got over $2 million in R&D just to get all the electrical and everything in the walls that allow them to still fold up. So there's a number of reasons why they're worth $500,000, but I'm going to tell you a story just to kind of illustrate this. I was driving down the road one day, and I love the outdoors. I love camping. I love hiking, mountain biking, rock climbing. I love all of that. And I was driving by this sweet looking truck and camper, and I'm like, oh my gosh, I want one of those. I want one of those. So I took a picture of it so that I could come research it later. And I found the website where I could buy one of these. And I was so excited. I'm like, oh my gosh, these are so cool. And then I was looking at them. I'm, yep, that's cool. That's way cool. And then I saw the price. I'm like, holy crap. It's $1 million. That's $1 million RV, basically. And they sell used, even a used one, a 2023 Okay, 2023 is still selling for $1 million, and they're actually selling for $1 million. It's crazy how much those things cost. So you can argue whether or not you think this is worth, the mini box is a $350,000 house, but it's only $70,000 down. So you only invest $70,000 plus $5,000 for all the admin and setting up the trust and the LLC and filing all the tax returns and everything like that for the first couple of years. So you're paying about $75,000 all in, and it's a $350,000 house, which means you're reducing your income by $350,000. This is $100,000 plus the $5,000 admin fee. That's $105,000, and you're reducing your income by $500,000. $500,000 reducing your income. Here's the duplex. It's $130,000 down, reducing your income by $650,000. Remember, if you have business income, there's no limit on business income. But here's the other thing: if you buy a box house that reduces your income by $500,000, there's a carryover for multiple years. So let's say that you only make $250,000 a year. If you only make $250,000 a year and you buy one of these box houses, it could save you money on taxes for 2 years in a row. Okay. So there's no time limit. You can spread out the taxes over as many years as you want. Okay. So there's a number of rules there. We won't get into those details, but it can carry over. All right. So what about cash flow? Yes, these actually cash flow. Right now in the oil fields, they're bringing in about $3,500 to $4,500 a month, minus the management that manages everything, because you don't even do anything. You literally do nothing. These houses are deployed and managed by another company called ReadyPod, and the payment on this one's about $1,500. So you're looking at about a cash flow of around $1,300 as an example, but a lot of it kind of depends on the lease, whether it's going to a data center or a natural disaster. There's a few different lease agreements, so it just kind of depends. The cash flow kind of varies. Okay, but there is cash. And the best part, like I said earlier, is the time. The best part is there's no time required. So all of you that chose a number 4 earlier, everyone that said that you wanted, something that required no time at all, there's no time required because the trustee does all the material participation. Now, again, we're not going to get into all the details of the structure. I'm just letting you know that this exists. Okay, I'm just letting you know that it exists. Here's some of our clients that took advantage of this last year. In addition to that, you've also received what we call some tax scholarships. Got a little tax savings, right?
Oh, yeah.
With the real estate or with the box house. So how much did you have to pay in taxes after using the box house strategy?
Well, no, I made money. I got some money back probably. And it's the nice part is, it's for the next 2 years for, kids in college so I'm banked the next 2 years of school with my middle daughter. She's pretty much going to have a zero, SAI number for the next 2 years.
Tax scholarships are so brilliant because they just open it up to anyone, no matter what your income is.
Yes.
So I love this thought process, and I'm a believer now.
Talk to us a little bit about the box house strategy and why you chose that.
Yeah. Well, at first, I will admit that I was skeptical. I was like, no, I'm very good at taxes. I've already got this covered. But the more that I started to learn about the box home strategy, I was like, oh, this is really interesting. This could help us significantly. So we originally owed the federal government $21,786. That wasn't even our state amount. Yes. The next one that we got, the federal government owed us almost $3,000.
So even after owning your own businesses, even after taking advantage of some of those tax strategies that you've already used in the past, this gave you an additional roughly $25,000 in tax savings. Does that sound right?
Yep, that's exactly right.
And are you able to roll anything over into the next year?
Yes. Oh, I forgot to mention that. Yes. So there's also an additional $150,000 of depreciation that will span into next year, which is great.
Talked to a friend of mine who's been working with you since 2019. And so it gave me a little bit of confidence to check you guys out. And it's just been good eye-opening and a good experience that I think a lot more people need to take a look at. Tell me what you guys did last year to help reduce your income and get some of that, free money. Well, through your program, we were introduced to the box house. It gave us a huge, $350,000 tax deduction. So we're looking for a lot of free money, hopefully, coming up now this year.
talk to me about your thoughts on getting into a short-term rental property in 2026. Okay. All right. Let's go ahead and jump into here. All right. Okay. So how to choose a tax strategy, how to choose a tax strategy. I gave you two examples, just two. We have many more. Okay. We have a lot more tax strategies. We have heavy equipment leasing. We have solar batteries. We have all sorts of other tax strategies. I gave you examples of two tax strategies. How do you choose? Well, the short answer is meet with our team. Meet with our team and work with our team. Work with our team and we will help you decide which strategy would be best for you. So click the link, or there's the link in the chat there. Click the link in the chat or go to taxscholarships.com and book a free call with our team, and we will help you to decide kind of what would be the best strategy for your particular situation. Okay, we'll talk you through it. Here's just a little bit of intro to our team here. I am so excited to be able to introduce you to our team. So meet our team. We are here to help you. Okay, so we have a very large team that obviously is here to help you. We break it down into a 5-step process, just so you know. So if you work with our team, the first thing we do is you get assigned a one-on-one specialist. Okay, we call them the creative strategy specialist. Your creative strategy specialist is going to be your dedicated point of contact. Okay, they're going to get a very good understanding of your goals, your vision, what you're trying to accomplish. Okay, they're going to help you create your annual tax strategy. They're going to connect you with all the right experts, and they're going to guide you from step to step through this process. This is your point of contact. It's one-on-one. Okay, unlimited access to this person. They are your concierge. This is not a group coaching program. This is not a course. Okay, none of us have time to watch a bunch of videos. Okay, this is one-on-one. We're then going to hook you up with some tax planning. We're going to talk about all the tax mitigation strategies. We're going to give you all the details you need on these different tax mitigation strategies. You're welcome to meet with your CPA. We can bring them in to look at some of these strategies. Customized implementations just for you. Everyone's situation is different. Okay, there's some business tax strategies as well. Like I said, putting your kids on payroll and all that kind of stuff. We'll help you with that, and then we'll just maximize that tax efficiency each year. And then there's the real estate. We're going to help you with that bonus depreciation, okay, cost segregations, private acquisitions team. So you get access to our team that is finding these houses. We actually have houses. Check this out. Okay, if you go to, this is for our clients, but we have all of these houses that we've already found. All of these houses that we've already found, that we've already done all the underwriting, we've already done all the analysis. Okay, we've already found these houses. We have lots and lots of houses. We have a whole team trying to find these houses every day, whether you want a house on the beach, whether you want a house in the mountains. We've got people finding houses every day. You get access to our team. That's going to give you the cash flow, and we can either do it with you or we can do it for you. Okay, either way. But again, we're not giving you a bunch of trainings. We're going to either do it with you, hold your hand, or we're going to just do it for you, and then you do your material participation. Oh, and by the way, I think I saw a comment about how the 100-hour rule is that nobody else can spend more than 100 hours. We have a very large team. We have a very large team so that no individual, including cleaners, no individual will spend more than 100 hours on your property. Okay? None of us will spend more than 100 hours on your property so that we're not competing with you to get your 100 hours. Just so you know, okay? College planning, okay? You then have access to our team to kind of analyze. We have some amazing software. Let me see if I have it pulled up here. Here we go. We have some amazing software that we can help you narrow down. Let me look at some of these. Hold on. Let me just go back here, back to admin. Let me just grab my sample client real quick. Okay, so we have some really cool custom software that we are going to give you a more detailed analysis of your SAI numbers. You used our calculator just to give you a quick overview. We're going to dive into a lot more detail, and we're going to understand a lot more of your situation, a lot more of your financial situation. And then we're going to help you with this tool. We're going to help you to look at how much these colleges are going to cost. Okay, so you'll be able to come into each of these schools, and you'll be able to break down what each of these schools are going to cost. Check this out. We have all sorts of data on these schools: admissions data, academic data, financial data, the student information. We have tons of data on each of these schools. Okay. And then we've got a calculator where we can help you calculate what the cost of college is going to be. Maybe your kids are at different ages and everything else. Okay. Maybe you have some kids starting now. Maybe you have some kids starting in the future. Okay. We can just quickly help you to estimate what your actual cost of college is going to be. Once we know what your college is going to be, we can figure out, what additional strategies do we need? What other strategies do we need? Do we need more cash flow? Do we need more tax savings? What is it that we need to be able to offset those costs of college? So we definitely still have all the college planning, and then the long-term planning. We're not here to just help you with college. We're here to help you increase your overall retirement. Let's help you with some tax-free retirement. Let's help you to get tax savings every year. Let's help you with your retirement. Let's talk about how we can use real estate to increase your retirement income. Let's use real estate to increase your retirement income. How about leaving a legacy? How many of you guys would like to leave more of your wealth to your kids? Like, let's make sure that we're passing on not just an education to our kids. Let's make sure that we're leaving a legacy for generations to come. We want to help you with some long-term planning as well. Now, we are not here to replace everybody that you currently have. If you love your CPA, great. Let them join our meetings. If you love your financial advisor, great. Let them join some meetings so they know what we're doing. If you need a new CPA, we'll hook you up with a new CPA. If you need a new financial planner, we'll help you. We'll hook you up with a new financial planner. Okay, you get access to our entire team. Here's what some of our clients had to say about our team. Tell me about your experience in working with our team. How's it been working with our team?
I think that has been truly the most amazing thing is, like you said, it's not here's the material, you paid a price, and now you have access to online web material. I wouldn't have found that very helpful at all. This is a handheld process, and it's individualized and personalized. So you don't give the same advice. You look at everybody's individual situation and then guide them through the process. And I found it to be extremely helpful. I would say that there are truly creative ways that you can get funding for college, and that if you come across Lance's company, you're in the right spot, and you should definitely don't even think twice, don't hesitate. I feel for the small investment that I've put in, I have had 1,000% return. But I found your company to be so helpful and so knowledgeable, and there's no reason to hesitate because they know exactly what they're doing.
Your program has already paid for itself, in my opinion, with the savings that we got just from one tax year. And I'm really grateful. We can look forward to like many more years of that. I would definitely recommend this to everyone. I have told a few friends about it, and I hope everyone finds you that can take advantage of what you're offering, because I think it's wonderful.
Now, if somebody was interested in learning more about tax scholarships and ways to get creative, what would you tell them?
I'd say definitely book a call. I mean, the team here is amazing. The college funding specialists, we've got tons of them, and they all do a fantastic job. And the key is that they're going to come up with a strategy that meets your specific family situation, because everybody's a little different.
Okay. All right. Let's go ahead and just to kind of sum this up, this is not a one-time thing. I think we made that clear earlier, but this is not a one-time thing. We want you to save money on taxes every year. Like, our goal is to work with you every year, help you reduce your taxes every year. What are your strategies? Due to time, I'm going to speed up. I want to leave you with this one last thought, and then we're going to dive into the Q&A. How many of you would jump out of an airplane, this airplane here? How many of you would jump out of this airplane without a parachute for $100,000? Just curious. Put it in the chat, and then we're going to dive into the Q&A here. But how many of you would jump out of this airplane without a parachute for $100,000? Put it in the chat. Yes, no. Give me a yes or a no in the chat. Would you jump out of the airplane? No. We got some no. Okay, nope. Okay, nope. Okay. All right, we've got lots of no's. What if it was on the ground? Okay. What if it's on the ground? All right, Janelle. This is Janelle. If it's on the ground. All right. Okay. Does that change things? Does that little bit of information change things? Here's why here's my point, okay? I don't want you to jump to any conclusions. I fire hosed you with a ton of information in a little over an hour here. The number one reason why I want you to book a call with our team is, first of all, it's free. Okay, we're not, we're not scary. We're just here to help you. Number one, we're going to figure out if this is a good fit. Okay, we're going to figure out if this is a good fit and if we can actually help you. We can't help everyone, and we don't have enough time or enough resources to help everyone. So number one, we're going to decide, we're going to, work together to see if we can help you. Number two, we're going to show you, more specifically how we can help you and answer some of your questions. We want to make sure you get your questions answered. Obviously, we're going to jump into the Q&A here, but if you have to jump off, book a call with our team, and let's make sure we get all your questions answered. Let's make sure we get all your questions answered so the benefits of working with our team. And again, we built this team for you. I wanted this team myself. I wanted to learn how to reduce my own taxes. I have 5 kids, okay, that I'm trying to help, support through college and everything else. And I want to do it as effective and as efficient as possible. And when I learned about some of these tax strategies, I just didn't have enough time. And so I thought, what if I built a team that all of my clients, including myself, could take advantage of? I've bought several houses. We have over 50 houses, and a lot of them are with our clients. I closed on 15 houses last week. We closed on 15 houses last week, a lot of which we're doing with our current clients. So we are working together. We're working together to help each other out, and we're taking advantage of resources that you would never get. We have access to tax strategies and some real estate strategies that nobody else has access to because there's so many of us. You hear about economies of scale. Okay, we have so many clients that are wanting to take advantage of these strategies that we benefit from that. We have people sending us deals that nobody else gets access to because we have so many clients that want access to these strategies. So we have some really cool benefits of all working together on this. So with that being said, go ahead and book your call at taxscholarships.com. And let's dive into some Q&A. I want to make sure that you don't think we're asking you to jump out of an airplane without a parachute, okay? Let's get all your questions answered so that you get all your information, okay? So that you know that, honestly, we're just here to help you. We want to help you benefit from this. So Daniel's going to be helping me with kind of managing some of the questions, but go ahead and put some questions in the chat if you have some.
Okay, Nadia wanted to know, was your car registered to your business?
Okay, so yeah, it does have to be a business expense. But again, if you're a W-2 employee, you can't write off your vehicle expenses. But if you start a business, maybe a real estate business, or you buy a box house, okay, you're going to own the box house through a Series LLC. That means you now are a business owner, and you could write off your vehicles and all sorts of other business deductions. So a lot of benefits there.
Lindsay's asking, can this be recommended to somebody that doesn't have kids in college?
Yes, lots of families just use this for the tax strategies and the real estate strategies, the box houses. You don't have to have kids in college. Honestly, think about it. Like, college is one of your biggest expenses in life. I think you guys are all feeling that right now. College is definitely a very, very large expense, but guess what? Taxes are an even bigger expense. Taxes are even more expensive than college, believe it or not. Okay. Taxes are even more expensive than college. And guess what's even more expensive than taxes? Can you think of anything that's even more expensive than taxes? Retirement. Retirement's very expensive. Sometimes you just need to implement some of these strategies for a better way to pay for retirement. Okay. If it's not using these strategies as a better way to pay for college, think about it like using these strategies as a better way to pay for retirement.
Okay, Maureen asks, does these strategies work with income from IRA withdrawals?
Okay, Maureen, we're going to get into a little bit of the details here, but think about this for a minute. When you take money out of an IRA, what happens? What's going to happen if you take money out of an IRA? I want to walk everybody follow with me on this, or an IRA or a 529 account. Let's talk about both of them. Okay, let's talk about 529 accounts and IRAs. When we take money out of a 529 account, and we don't use it for college, let's say, okay, if we take money out of an IRA, okay, or a 529 account, what's going to happen? Put it in the chat. Help us out. If you know, put the answer in the chat. Anyone. Okay, what's going to happen? No takers? No. Okay, maybe you're typing. I don't know. Okay, so what's going to happen? Oh, there we go. Penalties, taxes. Okay, so when you take money out of an IRA or a 529 account, first and foremost, there's going to be taxes. So in an IRA, you take money out of an IRA, that's going to be counting as income. In a 529 account, only the gains count towards your income, not the full amount. In an IRA, the full amount counts towards your income. In a 529, only the gains. However, that is offset by the cost of college if your kids are in college. If your kids are in college, okay, you can withdraw money from an IRA or a 529 account penalty free. Even if you don't use it to pay for college, you could still take college loans. You could take college loans to pay for college, but you can withdraw money from IRAs and 529 accounts without a penalty up to the qualified education expense for that year. Okay. Now, if you're prior to 59 and a half, there is a 10% penalty. However, if we take money out of an IRA or a 529 account to buy a box house or to invest in real estate, what does that give us? What does that give us? By taking money out of an IRA to buy real estate, what does that give us? Bonus depreciation, tax savings. Okay. So that can offset the taxes. So we take out $300,000 from an IRA to buy $1 million house. It reduces our income by $300,000. It's a wash. Now, how much cash flow are you getting? How much cash flow are you getting every year from your IRAs? Unless you're retired, it's zero, right? Unless you're retired, it's zero. So if you take money out of an IRA to buy real estate that starts cash flowing for you, and we pay you 8% preferred return if you partner with us on one. So you could get 8% on the money that you invested from your IRA. That would cover the penalties. Think about that for a minute. So the short answer is yes, you could take money out of your IRAs, but I just want you to understand kind of the pros and cons there. Okay. This is an inherited IRA that needs to be fully withdrawn by 2023. No penalty. Perfect. Even better. Let's take the money out. There's no penalty. Let's take the money out. You're still going to have to pay taxes on it, but let's use it to buy real estate that's going to offset the taxes. It's beautiful. It's better than a Roth conversion. For some of you that are thinking you should do a Roth conversion, why? Why would you do a Roth conversion? You have to pay the taxes. How about just don't pay the taxes? How about use the IRA to buy real estate so you don't pay the taxes? It's way better than a Roth conversion. Okay, if we take 100% bonus depreciation in year one, doesn't that simply shift the taxes to years 2, 3, 4? No, when you do bonus depreciation, okay, it does defer the taxes. And if you sell, there would be depreciation recapture. However, if you do a 1031 exchange in real estate, if you sell real estate and then buy more real estate, and there's some rules you have to follow, of course, you have to do it within so many days and all that kind of stuff. But if you sell real estate and then buy more real estate, then it's going to continue to defer the taxes. And then when you die, you leave the money tax-free to the kids through what they call a step up in basis. So in real estate, you can defer the taxes indefinitely. Okay. So that's how you get away from the depreciation recapture. You just have to always be invested in real estate. And who doesn't always want to have some money in real estate? Everyone should want some money in real estate as part of your portfolio. It's a great asset.
Scott mentioned that April's been awesome so far and looking forward to their meeting on Friday.
Awesome.
Nadia is asking what company manages the box house?
Oh, good question. So it kind of depends. We manage it. If you use it as an Airbnb, we manage it. And if you use it through like the data center program or the natural disaster program, then it is managed by a company called ReadyPod. ReadyPod is a place where the houses are actually stored, in these shipping containers ready to be deployed, or maybe they're already deployed for a data center for 7 years or whatever the case may be. ReadyPod manages that. So it's either ReadyPod or us.
How do we get the money for a down payment?
Okay, good question. So the money to invest in real estate or the money to buy a box house is going to come from the money that you were planning on using to pay for college. So if you have money that you were planning on using to pay for college, you're going to buy a box house instead, for example. That's going to give you tax savings that gives you your money back. Okay? So you use the money you have to buy a box house, for example. That's going to give you tax savings that gives you your money back. Then you're going to use the cash flow to pay for college and the college loans. Okay. So that's kind of the main plan is you take the money that you were planning on using to pay for college.
Okay, Scott just asked if I have depreciation rollover from a previous year and you sell a bonus depreciation property, does the rollover count towards the depreciation reclaimed when you sell?
Okay, so I think I followed you. So bought a property already. Okay, so he's already taken some tax savings that's rolled over, and now we're just stacking on more tax savings, right? If I understand that correctly. So let's say that you've already done something in the previous years. Is that right, Scott? Okay, so yeah, if you already did something, like let's say you bought real estate last year, okay, and it's going to help you for 2 years or something like that. We could still go buy more this year and get more tax savings and just start stacking it. I've already bought enough houses this year to save me on taxes for 2 or 3 years. And I'm just going to keep stacking it. Like, okay, you can stack it up and just, then you got lots of years of tax savings.
Mary's asking what happens when you no longer want the box house investment.
Okay, so if you ever sold your box house, okay, then you would pay depreciation recapture, or you just keep it once it's paid off. Okay, so there's a couple of options, but one of the options is a 0% interest loan. So let's say you're making a payment from your rent. In fact, you're not even really making the payment. The people who are renting it. The people who are renting it are making the payment. Once the house is paid off, you can do whatever you want with it. But if you sell it, you're going to pay taxes on it. Just like my vehicle. If I sell my vehicle, I'm going to have to pay taxes on it. But if I sell my vehicle and buy another vehicle, then I could offset the taxes, right? So in real estate, you can do a 1031 exchange. But in a box house or a vehicle or some of the equipment leasing programs, there could be some recapture in the future, but then you would just buy another box house to offset the recapture, basically. There's a few ways around it.
Question around what happens if the money is in a 529 account?
If you have money in a 529 account, remember, you can pull money out while your kids are in college, tax-free and penalty-free, okay, up to the amount of qualified education for that year. If your kids are not in college yet, okay, and you take the money out of the 529 account, you're going to pay taxes on the gains and you're going to pay a 10% penalty on the gains. But by buying a box house, for example, you're going to offset your taxes way more than it's going to cost you.
What are the risks of having real estate fully depreciated in the event you sell? You have to recapture the tax.
Yeah, you just do a 1031 exchange. Yep.
How much is it yearly to have you manage real estate or a box house?
So if we're managing a property, it's typically 20 to 25%. ReadyPod is 20%. If we're managing it as an Airbnb, it's 25% of the revenue, 25% of the revenue. But that's, again, in the regular box house program, that just comes out of the lease. They handle all that.
All right. One more question here. Do the STRs generate enough cash flow to pay for its own mortgage payment each month and still have enough to be used to pay for other college expenses?
Yeah, so that's why we offer a program that allows you to partner with us and we'll pay you a minimum of 8% preferred return so that you can know you've got a certain amount of money to pay for college. And then our goal is to help you make more than that. But we just offer an 8% minimum because we have lots of properties, we have lots of income streams. So we want to make sure that we kind of minimize your risk by offering that minimum preferred return so that you can know that, like, if you took $300,000 instead of paying for college with it, you take $300,000 and put it towards real estate, we would pay you an 8% preferred return on that. So you can kind of calculate that as a way of paying for college.
And that was our last question.
Awesome. Well, we pushed 90 minutes here. I know we've been on here for a while. I know most of you stayed till the end. So thank you. Thank you for sticking around. I appreciate you. Go ahead and book a call at taxscholarships.com. I hope you found this helpful. Give me a thumbs up if you've learned something new today, if this was helpful. All right. LB says, thanks so much. You're welcome. We got some thumbs up. Awesome. Hopefully this was not your typical college webinar. Hopefully you learned a little something unique. We love to help families with tax scholarships. Looks like we've got lots of thumbs up. So hopefully this was helpful. And yeah, you guys have a great night and book a call with our team. And we'll meet you on the other side. All right, we'll talk soon.